Okay guys, Saturday the 25th of November and we are starting on the S&P 500. So we'll have a quick recap of this market from last week in relation to our Sunday analysis. We'll then look at the market for the trading week ahead before we move on to the NASDAQ. So I've left the sloping trend lines on this chart. I've also plotted the key levels from last week, so 2560 to 2570, 85 to 90, 93 to 97. Now, last week, what we were looking at was how we had potentially broken down below this sloping support and resistance on Wednesday. We'd then press back up the retest on Thursday. And then on Friday, we had seen the rejection coming back in, which was giving us the suggestion that potentially we were going to reject off of this level. So at the start of last week, we were looking for potential resistance at this area. On Monday, you can see the bears stepping in, forcing the market all the way back down to 70 to 60, which was our key level of support. And then the market put in that very strong bullish rally once again up into the all-time highs. Now, what we also went over was that we had the all-time highs from the 7th and the 9th of November as our last level of potential resistance. So all-time highs are always worthwhile looking for the bears to step in and also for the bulls to look to take profits on any rallies. However, we also added in that 2,600 level, which was sitting just up above. Now, the reason for that is it's a round number. As we went over round numbers, there's psychological levels in the market. Very often you see people setting orders at these levels or looking to get out of trades at these levels. The reason it's important is because on Tuesday, Wednesday, Thursday, and to even some extent on Friday, you can see the market pressing up and rejecting at this area. Now, what would have happened for lots of traders is as soon as this market started to break up above the previous all-time highs, they would have looked for potential breakout trades, continuation of the bullish momentum. You can see the market pops up, triggers all these traders in. Then we see rejection, rejection, and rejection. We actually rejected on Thursday back down to our key level at 90 to 85 before the bulls stepped back in once again. Okay, so for next week, what are we now looking at? Well, our zones are pretty much staying the same. So our level at 2,600, we're actually extending just a little bit to take into account the spike up from Tuesday. So around about 2601 right here. And although we made that bullish movement on Friday, I'm not really looking at this as a break up above as yet. Basically, we've pressed up and rejected. I'd like to see a nice clean break before we had the pullback, and then we'd look for that potential bullish continuation. Now up above, we don't have any levels of price action to find our support and resistance areas. We have that sloping trend line, but really, if we break up above and we look for those bullish positions, we'd be waiting for the market to give us further evidence. Now down below, we are also continuing to watch this sloping support line. If we pull back to that 90 to 85 level, it remains key support. And actually up above at this level here, certainly the lower band, so around about 2597 to 2593, where it's lining up with this sloping support line. If we see the market pulling back, it's a good area to look for potential bullish continuation back up toward those all-time highs. Now, it's only really if we start breaking down below 90 to 85 now, the market would once again be breaking this sloping support line, breaking this key level of support and resistance. We could then look for the pullbacks and potential stronger bearish reactions once again, certainly down toward 2577 and potentially all the way back down to 2570. So a quick recap, we need to see a nice strong break above this level to look for that potential bullish continuation. If we see pullbacks towards this lower band, lining up with sloping support, we can look for bullish positions. The 90 to 85 level also for those bullish positions, and it's only if we start breaking back down below that level that the bears would certainly be in short-term control once again, and we could look for the moves back down to 77 and potentially all the way to 2570. Okay guys, let's move on to the NASDAQ. Okay guys, now let's do the exact same thing for the NASDAQ. So I've left in our sloping trend line. I've also replaced the 6353 to 6333, which is our key level from last week. Now what we can see from last week is we had a doji candle on Monday. We then had that strong move up on Tuesday. Wednesday and Thursday, again, very small candles. Thursday was actually Thanksgiving in America. And then Friday, once again, a strong bullish movement. So no real reactions from our key levels. We just broke up above. We didn't see any pullbacks to test. Now, the Wednesday, although Thursday was the holiday, but certainly Friday once again, these are really reacting with our sloping resistance line. So if we just take this line up and we just bring it slightly down to incorporate the close rather than just the spike up of the 16th of November, what you can see is the market pressing up and testing on Tuesday, Wednesday, even Thursday to an extent, and then Friday we've had that strong bullish movement. However, we've just pressed up into this key level of resistance once again. So coming into next week, sloping support and resistance remains key. What we can do is take into account those sloping resistance lines, and really the close from Friday is the only other clue we have because we are now up toward all-time highs. We can continue looking for potential resistance at these levels. However, if we do start to see a nice break up on this market, potentially back up above that trend line, it becomes a good area of potential support to look for that continuation and the moves higher. Now, the key level of support, if we see the market breaking back down once again, remains toward this 53 to 33 level. If we break all the way back down here, it's good to look for those potential bullish positions. Now, in between, let me just get rid of this. We only really have a couple of small candles to give us clues. Basically doji candles. So we're taking the close, the open, and then the highs. The open, the close. Also the tiny little spike down from Friday. Down into those lows right here. One level. And one level right here. So if we extend this. So if we see the market pulling back, certainly if we are going to continue with this very strong bullish run that we've had, it would likely come from one of these two levels. So very often if you are having very strong trending movements, they don't pull all the way back into key levels of structure, they react a little bit higher up. So both good areas to look for potential bullish positions. Now also, if we break down below this level, it becomes a good area of resistance to look for the move back down into this area of support. If we're breaking down below this level, it's likely we're going to see that correction back down toward the 253 level, which, as we've mentioned, remains key support. And we could then start to look for bullish continuation once again. So really, those are the main areas for me next week. There's only really 1, 2, and 3, and then we're looking at that sloping resistance up above. So a quick recap, although we had the strong move up on Friday, it is still testing at that sloping trend line. We can continue to look for potential weakness up here. It's only if we see a nice strong bullish movement and a break above that we could then look for that bullish continuation. Pullbacks, we have the doji candles giving us a little bit of clue as to potential support, If we're breaking down below either of these levels, I'd also be happy to look for potential resistance, the move back down. Breaking down below here, the move back down toward that key level of structure at 6.353 to 6.333. Okay guys, so that is everything for this week. As always, I hope you found that helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.